Okay, welcome to today's class. You're doing an ABCD pattern. We want to understand the rules of engagement of ABCD pattern. All right, we've been doing several patterns, so this is another one of the patterns we also use in trading. But now this is a pattern yourself you generate, yeah, by drawing the key lines and the key ratios. All right, and the tools we use in ABCD pattern, one is Fibonacci retracements. Primarily, we use 61.8, and as I've said before, Fibonacci 61.8 is usually very critical. Yeah, it's one of the critical ratio. When I see a signal there, I actually find it's a good opportunity for me to enter a trade. So the other tool we use under ABCD pattern is Fibonacci extension, 127.2% and 161.8%. Those are the three key ratios we use under ABCD pattern. So the time frames, again, this pattern can be identified on any time frame and can be seen in formation of other advanced patterns. Yeah. So again, as we said, all what we've discussed in this course can be applied in any time frame. Okay. So it can work well with anyone, whether you're doing a 5 minutes or a 1 hour or 15 minutes, it's still okay. Yeah, all these patterns can be seen under all these time frames. So the same case with ABCD pattern. So you see the tactics of ABCD pattern. So we see the tactics for the ABCD pattern are very similar to other well-known advanced patterns. We seek to identify 3 market moves and 2 major Fibonacci zones. So the combination of these moves form the 4 points. That is point 1 is A, point 2 B, point 3 C, and point 4 D. That now fulfill the pattern. So once you're able to identify the 4 points and they fall within the right criteria we're going to lay down, then you know it has fulfilled the ABCD pattern, and then you trade at, you enter the trade as per the set rules of the ABCD pattern. So under ABCD pattern, it's made for you to enter your trades at D. All right, you're supposed to enter your trades at D, which is like a reversal. You are doing actually against whatever we have been doing. Previously, like yesterday, we were seeing how you enter, you make it, your expectations, and you trade as per the trend. Yeah, but ABCD pattern gives you an opportunity to trade against the trend. All right, and you're going to see how that works. But you can also enter at C. Yeah, we're going to see all that and see, but it's made to give you an opportunity to enter a trade against a trend. Yeah, where market is expected maybe to retrace deeper or even to reverse altogether. All right. Then rules of engagement for this one. Criteria 1 is that the ABCD pattern begins with a market movement or impulse leg that establish our A and B points. All right, so it starts from A and B points. If you recall, yesterday we discussed about the swings. Remember, like a downtrending market, we are talking about a swing from high to low. Yeah, those were our swings. So the same case with ABCD pattern. Now, point A and B, it forms the first move. It's like now that swing. Now, just try to figure out how we were drawing the swing from high to low. So the high becomes our point A and low becomes our point B for a downtrending market. So that swing now forms our point A and B. Okay. So once the A and B points have been identified, we then look for our first criteria, right? So A and B are very easy to identify, and then you draw your swing line between A and B. Now from there you start identifying if the market is going to fulfill the criteria, and the first criteria is that the market forms the C completion point by fulfilling at least a 61.8% retracement of the AB leg. All right. So once you draw your AB, that is the swing. Yeah, you draw also Fibonacci ratio coming from point A to point B. All right, because it's a downtrending market, so you place it at A, drag it down to B. Then your C will be at least at 61.8% retracement of the leg AB. All right, so that becomes our area of interest. That's why I say we can actually trade, we can enter 2 trades in ABCD pattern, because if you identify it early enough, you can actually enter a trade at C Yeah, and then the market gives you another chance. As it moves to D, you close your first trade at D as you enter a reverse trade up. And you're going to see how this works, okay? So you're saying once you draw your AB points, yeah, you draw also Fibonacci ratio starting from point A to point B. Yeah. So now the market will form the C completion point by fulfilling at least a 61.8% retracement of the AB leg. So once the market retraces up to 61, at least 61 points, now we mark that as our C. Please note the BC move. Just 1 second. All right, it's fine. It's something which can wait. So we are saying, please note the BC move remains valid as long as there is at least a 61.8% retracement of AB and there is not a candle close beyond the 78.6% retracement of AB. All right. Also note the C completion point of the candle wick can extend beyond the 61.8% retracement of AB as long as the candle does not close beyond the 78.6 retracement of AB. Yeah, so we are saying once the market retraces, it has to go, we are saying at least a 61.8. So it can go past 61.8, but it should not close, the candlestick should not close above 78, because the moment it closes above 78, now the ABCD pattern is invalidated. Yeah, it can go to 78 and then it goes down, it closes, it forms a wick. There is a price rejection, it forms a wick and closes below 78.6%. So the C completion point candle wick can extend beyond the 61.8% retracement of AB as long as the candle does not close beyond the 78.6% retracement of AB. And we have an example here, all right? So when you look at this pattern, again, it's a downtrending market. So we draw our swing or our point A to point B, okay? Our point A to point B, all right? So once you draw that, we draw our Fibonacci ratio, and then you see C should be somewhere along this line, all right, a point C. So that becomes our area of interest, somewhere along 61.8%. So if the market retraces and it touches, it goes up to 61.8. So it has fulfilled criteria number 1. As you can see, the BC leg extended beyond 61.8% but closed below. And that's valid for ABCD pattern. All right, but it closed below the 61.8%. So that already now criteria 1 is fulfilled. Now we go to criteria number 2, right? So if criteria number 1 has been met, then look for criteria number 2, right? And you're saying criteria number 2, the market forms the D completion point by fulfilling at least a 1-to-1 harmonic move of the AB leg coming in at a 127.2% extension of AB. So for ratio, confluence, confirmation, and measurement of the BC may be taken, and the extension, okay, this second point is, we'll leave it out for now. So let's work with the 1-to-1 harmonic, because this requires us to add some other ratios, which you didn't add when you were adding initially. Yeah. So here we are looking at the 1-to-1 completion of AB to CD, and also the leg coming in at 127.2% extension of AB. So remember, this market is downtrending, and what we saw yesterday, our expectation, because B is a new structure low, and our expectation is that the market will retrace and form a new structure low somewhere before B. So B will be somewhere before B. D will be somewhere below B to form a new structure low. So that criteria, the ABCD pattern, will be fulfilled if D, where it is located, when we pick this line that is A to B, we pick it, we place it from C to D, it will touch the 127.2% extension of this ratio, Fibonacci, drawn from A to B. Yeah. So remember, when you draw this Fibonacci, the extensions come somewhere down here, 127, 138, 161. All right. So we are saying D is validated when you draw this, we pick this line, this A to B, we pick it and place it from C to D. Where it is ending, it touches the 127.2 extension of leg AB. All right. So that is now the confluence of 1:1 harmonics and extension 127.2 of AB ratio, or rather AB leg. All right. So please note the D point remains valid as long as there is at least a 127.2% extension of AB and there is not a candle close beyond the 161.8% of AB. In a valid CD move, there must be at least a 127.2%. So failure to achieve this, it invalidates the pattern, right? An example of this is presented below, all right? So we get those are two criteria. Criteria number one, the market has to retrace up to 61 point, at least just to touch 61.8, all right? It can go past it, but should not close past 78.6% ratio, all right? And then criteria number two, D should be positioned in such a point such that when we pick this line, the 1:1 completion of ABCD, it touches the 127.2 extension of AB. And you're going to also see that practically, okay? So we want to see an invalid ABCD pattern. As you can see, we got our A to B, and then criteria number one was fulfilled. The market moved to ratio 61.8%. So criteria number one is fulfilled. We have our C. Then we pick this line, the AB, we drag it to CD. So that is the 1:1 completion. And then we draw our Fibonacci AB to get the extension of 127.2 here. So where they touch each other, this is our point D, all right? So when the market comes and reaches here, we should enter our trade here. Because of this confluence, when the market fulfills this pattern, it tells us at this level it's going to either take a deep correction or retracement or reverse altogether, all right? So I was saying in this pattern, you have two opportunities of trade. If you notice before it hits point C, you can actually sell here, yeah? And then you draw your patterns, you mark your D, all right? So if you sell at C, your TP will be at D, and your stop loss will be above point A, all right, above structure. So once the market fulfills the ABCD pattern, at point D, you close your sell trade and then you enter a buy trade, yeah? Also, when you see the market has fulfilled C, and when you draw 1:1, and then you do Fibonacci AB and the extension 127.2, it touches the CD leg. Then you can even place your pending order here, a buy limit. So that's also the price is here. You're saying if this price goes and fulfills the ABCD pattern, it's gonna reverse, yeah, and gonna take a deep correction, yeah, or reverse altogether. And I want to take advantage of that deep correction or reversal, then I get an opportunity to pocket in more points, all right? So when we are trading the ABCD pattern, because it's designed for you to enter trades here, we can place a limit order here, or you wait for the market to come here and then you buy. If the market has been downtrend, if it was the opposite, now you will sell. So our limit order placed at D completion point, that is 127% of AB here. Stop loss, you place it 10 pips plus or minus 161.8% extension of AB. So in this case, if you're buying here, our stop loss will be 10 points below this line, just somewhere here. That's our stop loss. And then our TP. Here we have two TPs. TP number one, or rather target number one, will be at 38.2%. retracement of AD move. AD, remember this is AD, all right? So our target number 1 will be at 38.2% retracement of AD move. When it's attained, you can move your stops to break even, all right? And then your second target will be at 61.8% retracement of AD move. So when attained, trail stop to structure plus or minus 10 pips. So we are saying once you've entered your trades here, you will draw another Fibonacci from A to D, all right? So your TP will be at 38% of retracement of the AD and the second one at 61.8%, all right? So you can actually enter even 2 trades. You can break your trade. If you wanted to buy a 0.1, you break into 2. You can place a buy limit, saying just in case, because the market does not always have to respect this, but it's expected that the chances are very high that it's going to respect. But anything can happen and it goes against our expectation. So you can say, I'm going to place a limit, a buy limit at D, all right, of 0.05. Remember, your plan is to enter your trade of 0.1. So you break it into 2. I will enter a buy limit at D of 0.05. So once the market hits at D and it notifies me, or rather it appears actually going to reverse, I can add positions. I can add 0.5 right now. So in total, I still have my 0.1 trade in operation, all right? And then in those 2, you also place 2 targets. You can place one at 38.2% and the second one at 61.8%, such that if the market hits and reverses, at least you've not lost all the profit, you've gotten something. If it proceeds, again, you also take advantage of the move from 38.2 to 61.8. And also, if you're at your machine, you can also trail. You see the market is approaching 38 with force, you move your TP a little bit further, maybe all of them to 61.8%, all right? So that's how we trade the ABCD pattern. So what happens once it reverses and it hits 38.8% retracement of AD? Now at that moment you move your stop loss to break even. Yeah, break even means the buying price plus a few pips, right? So you move your stop loss to break even. Once it crosses 30, now you can start trailing. You can start trailing at structure or at least 10 to 20 pips behind the price. So that in case now it resumes the original move, at least you don't give back all the profit. So that's how you identify the ABCD pattern and also how you trade it. We also have AB is equal to CD. Yeah, there are moments you just see AB is equal to CD. It's not the same as ABCD pattern. Just AB is equal to CD. It means D may not be fulfilled. Maybe the first criteria is fulfilled of C being at 61.8%. But D, it's somewhere here, it gives us a new structure law, but where it is located, it's not a confluence of 127.2 and the 1:1 harmonics. Okay, so that the AB is equal to CD is just a 1:1 completion, fulfilling criteria number 1 of C at 61.8%. That's another one. Then you also just have the normal 1:1 ratios. Yeah, so that one is very common in Forex, where the market moves are always, we saw there's a tendency to have this, the market repeat the same pattern. So you find this move is exactly equal to this move. Although the retracement may not be at exactly 61.8, it can even be at 50 or 38. But you find the AB, or rather this move, the first leg is equal to the second. That is the 1:1 harmonics, all right? So, and that is very common in Forex. And also that helps us to set our take profits. So once you draw your first swing, then you drag it to place where this one starts. So you expect the market to move up to the end of the next one move. So you place your TP there. And that is 1:1 harmonics. Okay. So this is the ABCD pattern. It has 2 criteria which have to be fulfilled. And then you also have the normal AB is equal to CD. In such a case, D may not be exactly fulfilling the second criteria. And then you have the normal just 1:1 harmonics. Right. So that's how you trade our ABCD pattern. So we are going to see a detailed example here. So we can see here the move, the first AB, you drag that line, you place it here, should be equal. And then D comes in line with 127 points, although it can extend, but should never go beyond 161.8 as we've seen, right? And then we set our stop loss 10 points below 161.8. Then we draw another Fibonacci A to D to help us set our targets. First target at 38.2% retracement, second target 61.8% retracement. And then you let the market play out. If it obeys the rules, you pocket your pips. So we're going to look at an illustration in our charts to see how it works out. So let us see. I'm going to take you to my platform. We share screen. Hope you can now see. I said I need to log in to be able to see what, especially the guys using the phone, they can see. Just for purposes of follow-up. But I hope by now you can actually see. So you're going to identify those patterns. So this is a good example. I'm going to use this. So remember yesterday we said these are our swings, high to low, okay? So this is our new structure low. The market retraced from the new structure low, okay? So we mark this as our point A, B, and our first points are point A and B. So this would be our point A. And then this will be our point B. Point P. All right. So let's say we've come when the market is to somewhere here, right? We've come from the market is there, so we've already identified B. We mark it. Yeah, we draw our Fibonacci to see where to expect our C to come to. So we draw it from point A to point B. All right. And you can see the market retraced. It touched at least 61, Although it went and hit 71, 76, but still came down. It never closed above 76. So as long as it doesn't close above 76, that's a valid one. So that becomes our point C. All right. This becomes our point C. So criteria number 1 fulfilled. Okay. So if we are in a position to sell, we can actually enter a trade here. All right. We can actually sell. We can enter a sell trade there. And because we're expecting it to fulfill our ABCD pattern, but what will you give you a signal that this market is likely to fulfill our ABCD pattern? First, it will fulfill the first criteria. Then you mark your 1:1 of AB leg. So once you draw this, you double click it and then you drag it because it has to be equal. It's the same measure, okay? So you place it from there and it gives us, at least it is in line with 127. They don't have to be exactly just one touch, but that range, yeah, it is on the same zone. They are already together on the same line. So this, there's a possibility it's going to fulfill our ABCD pattern. So you set your take profit for the sell at point D. So we expect this to be our point D. Remember, as you do all this, the price has not yet come anywhere near here. It's at C right now. But you're trying to set up your criteria where you expect the market to move, all right, to move to. So you mark your T. And then you set this to be your take profit. And then you wait for the market to play out. And then the market just plays out and fulfills our ABCD pattern. You can see that we do this and then we move it to just a second. Just have to be a little bit exact. Now we move it to our CT. So that becomes our D, all right? So this was our C. And then because the market, we identified the moves before the market started, we are saying we entered the entry at point C. So if you sell at C, your TP should be at D, where there is confluence of 1:1 with extension 127.2% of the AB leg. All right. So when the market comes, so we are saying when you're already at C and the market is moving down, you can set up your buy limit here. All right. So we are looking to buy at D. All right. So here we're gonna enter our buy entry at D. So as the market is coming down, you can comfortably set your buy limit, all right? But because we still say we have to manage our risks, because I'm seeing many charts. Is there somebody? What do you mean draw Fibonacci twice? You only draw once. That's why we added the ratios. If you remember, Luther, we were adding to the main so that when you just draw once, it gives you that. For T20, for MT4, once we add our ratio, the 127, the 138, the law appear in one. You draw once, it generates that. I don't know that I'm getting you, but for the extension 127, it will be generated. Yeah, if we added the way we are discussing in the other class, once you draw the Fibonacci from A to B, it automatically generates the extension 127.2. The way we set it up when you are adding manually the 127, the 138. If you remember. But if your system has a separate extension, then you have to draw twice. You draw the Fibonacci retracement, and then you draw Fibonacci extension. All right? You understand? Very good. So for this one, the way we set it up, when you draw once, it gives us the extensions. Yeah. But as systems, you have to draw the Fibonacci retracement, and again you draw the Fibonacci extension. I can actually show you one right now. I can show you the same one in a different system. Like when you come to this, which chart is this? This is GBP/USD. You can see that this is what I call the Ninja Trader system. That is 33. Let me see. time frame was H1, so 1597. So for this one, we can actually, we will draw the Fibonacci because there is retracement from A to B, yeah? And it exactly fulfills our criteria number 1. The C is here. The C is here where we have the retracement 61.8%. Very well fulfilled. We mark. So we need to mark our D at the extension. So I will do my point AB. Nice. Carry it. Bring it this way. And then I draw my extension. Yeah. This is my extension. You see the 127 now there. And still in line. So this becomes my D. And the market still with a different system, it fulfills the criteria. It is still moved. It bounced at where we have confluence of 127 and on its 1:1. So for such a system, you have to draw them twice, the retracement and the extension. But M4, the way now we set our ratios, you only draw once it generates the extensions. Okay? So we go back to where we were, what we are using for trading. So we've seen now we've set our buy entry here, a buy limit. So wait for the market. When it comes and you see your entry has been filled, and you see the market has the signs of reversing, we can already see a bullish kangaroo tail. Then you can add positions. You buy the other 0.05. So in total, your trade is for 0.1. All right. So now after that, you set your TPs. We said you have two TP targets. One at 38.2% of the AD retracement. All right. The D retracement up to 38.2, and the other one is 618. So now you draw the next retracement to set your TP, all right, up to point D. Yeah. So, and I'm going to change color so that we can see the difference. So the yellow is the retracement of AD, all right. So in this case, our TP number 1 is gonna be here. The yellow one is the, oh yeah, it's gonna be here. So we have our TP number 1 here. Okay, then the second target at 61.8, which is around here, right? Then we set up our next TP at 61.8, retracement of AD, right? So we have TP2. Okay. And then our stop loss will be 161 is somewhere here. Our sell, actually I think I've used the same one during the other class. Our sell is 10 points below 161. And in the morning class we noted our TP was we bought at we're buying at around 127.83. Our TP was coming to 127.20. If I'm not wrong, yeah, it was coming to 120. That was 60 points of our TP. Sort of an SL, sorry for that. Our SL was like 60 points from our entry. Then our TP1 was coming to around, because it is 27.85, take away 28.61. That's 75. Yes, that is 75 points. So already it's more than 1:1 risk reward ratio, which is good enough. Then our TP2 is coming at 29.14. So that is 130 points compared to a risk of 6. So that is actually 1:2. Yeah, you are risking 1 to get 2. Yeah, so when you follow this, it's giving us a very good risk-reward ratio, and it's a trade worth taking, all right? So you set up your system and you let your trade run. So after D, you see the bulls are really coming with a lot of force. You can always move your TP up, and then once it hits the TP1, that 8.2, you can move your TP and just move it up. Then you move your stop loss to break even. Yeah, you bring your stop loss here. You move it here, bring it above the buy so that you lock in your profits. Such that if the market goes against you, then you're safe. And as you can see, the market actually reversed. Yeah, this was our previous higher, lower high, and we said what we saw. The moment the market breaks that, the market is now, it has reversed, it has changed direction. So now we look for opportunity to buy, and thank God we're already inside with a buy at point D. So we are pocketing profit as the market moves up. So that's how you trade ABCD pattern. Okay, and you see it fulfill the two criteria, and it obeyed the expectations. It's actually going up. All right, and remember, I told you fundamental analysis and technical, they complement each other. You cannot be one. This is GBP USD. You know the politics in Britain about the Brexit. It had come as low as 127, and everybody thought this thing is going down. But when it hit D, it reversed. It's now at 1.3. That's why I'm telling you, you just stick to your technical analysis. The other is you find your trade still going together, because the market sentiment, it sort of causes the price chart to follow as per the technical analysis. So with all the Brexit are fundamental stuff, the chart has fulfilled the technical analysis. All right, so you can never separate the two. They speak to each other, they complement each other, and you can never have a technical analysis telling us to sell, yet fundamental is telling us to buy. They complement each other, because it's purely technical analysis and tells us you have actually bought at D, and you see actually we have had a better opportunity, because when it got to the market just reversed and it has been shooting up and up. So you see the two complement each other. Any question before we move from this one and go to Confluence? Any question? We are together, we can move on. Great. So we go now to discuss areas of Confluence. That was one scenario where exactly the two have played out so well. The technical analysis and fundamental. Given the Brexit is such a big move in the market right now, but it has fulfilled our technical analysis so very well, and like we had a better advantage than even anyone else. Okay, great. So we go to areas of confluence. Remember, also in ABCD pattern, we've used the strength of our confluence. And our confluence was 1:1 harmonic, coinciding with ratio extension 127.2%. So that strengthens the expectation. It makes us now have a higher probability of the market playing out as per our expectation. So when any of those two parameters meet, and you're going to see which particular ones we look for, they strengthen the market obeying to our expectation, or rather it makes our expectation stronger. So the probability of the market playing out as per our expectations gets stronger when there is some confluence of some sort, and you're going to see the types of confluences we look for. So you're talking of trading confluence levels. When you have two or more levels come together at a certain point on your chart, that's confluence. Price tend to respect areas of confluence and react strongly to such areas. Excuse me for a second. So we are saying there are four main areas or levels where confluence trading can happen. And these are support levels or support zones, resistance levels, Fibonacci levels, and trend lines or structure, right? And all these you've seen what they are. And there are 4 confluence trading price action techniques every forex trader needs to know. And one is support level confluence trading. So you want to see what this is all about. And in the chart you're going to see these are the things you should notice right away. First is support level in blue boxes. We're going to see what that is. Then we have price has tested support levels on previous occasions and the price and the levels held, right? Then notice also that there is the rising trend line as well, providing another confluence factor to that support level. So when price went down again to the zone of that level, that is the white arrow, we're going to see where the white arrow is, the trend line was providing support as well as it was in a support level zone. So what did the price do? It shoots up, all right? So we're going to see in our chart where all this explanation is. So when you look at this, remember we say when you're doing your analysis, always look at how the price is behaving to your left, the left of the current price level. That is what helps us to notice the patterns and to form an expectation, right? So when you look at the 3 blue boxes, there was very strong support here. The market tried to break, it went back again, and it faced support there. So it was only facing support, bouncing just a little, come back, it finds support, it bounces back again. Until where we find this, the horizontal support line, it's coinciding with our trend line, what you can also call a diagonal support line. And where they are meeting, they are crossing each other. When the price hit there, now it went without looking back, yeah? You can see previously it could hit support, just bounce back a bit, just a few pips up, come back to support, just bounce. It was unable to go far. But the moment it hit, where there is confluence of 2 supports, diagonal support and horizontal support, the market shoot up and went up without looking back. So that's what confluence does. Yeah. And again, as I've said, before, market is not operated by robots, but human beings. The same way me and you, we are forming those kind of, we get this knowledge, we want to trade using this kind of ideas, it means only more people trading that kind of information. So when you have information, you know when the market gets there, it's likely to go up. So there's an opportunity for you to buy, all right? And then the market goes up and up with you. So you look for levels of confluence. But remember, you analyze the price from the left and see, what is the price telling me? You draw your tools, your resistance, your support, and see, where do I have confluence? What do I expect the price to behave there? Then from there, you develop your area of interest, all right? When the price was behaving like, let's say you are not even bought, and you can see price approaching. Yes, you can say actually when the price hits and there is rejection, I'm going to buy here, all right? So this becomes your area of interest. How is the price going to behave when it hits this confluence level? And you wait here. So when it hits where we have the white arrow, the market shoots up and the bulls took control, and they went past the area they were not able to cross before they reached that area of confluence. So that's a confluence of support lines, diagonal support and horizontal support. We've discussed this, you already know how to draw them. Then we go to resistance level confluence trading. And you're saying in the chart below, notice that was a support level that was broken. In the blue box, you're going to see that. And price was heading up. So this was a potential support turned resistance level coming into play here. So the confluence trading factor comes into play here when you notice that if you were to draw a Fibonacci retracement level, price actually turned down from there, that 8.2 Fib level. So what you have here are 2 things. 1, a resistance level, 2, a Fibonacci level. So 2 things coming together at a meeting point. So what happens next when they meet? Price falls. This is confluence trading with price action, all right? And you're going to see the chart to see all those explanations. So when you look at this, look at where the blue box is. There was support there, and the market went up, came back again. When the bears came back, they came with a lot of force. You can see where they crossed. It was just a bears in control, not even a single bullish candle. So they came with a lot of force, and then they broke the support. So, and we said anytime support is broken, it becomes resistance. So when you're looking at it up past the other side of the line, we expect it to behave or rather to hold as resistance. Yeah. So when the price came down and started retracing, so what one need to do is to draw your Fibonacci ratio, and then you notice there is a confluence between the support now turned resistance and your 38 ratio. Yeah, on between 38 and 50. All right. So this becomes another area of confluence. So the moment the price hit that resistance, and there's also confluence with the ratio, the bears took over and again they took control. And you can see how they push the market up without even a single bullish candle. They took control. So that's the power of confluence. It helps us to identify our areas of interest, and then we wait for the market there. Once it gets there, now you enter your trade as per your expectations or as per your strategy. Then you're looking at the number 3 type of confluence trading, and that's Fibonacci level confluence trading. So if you love Fibonacci, which we do now, I'm sure we are all in love with Fibonacci now that you know how to draw it. Trading confluence with Fibonacci is a skill all traders should possess. In this example below, you will notice that price was in an uptrend and eventually it started to head back down. Now you have the high and low required to draw your Fibonacci level to give you an idea of the price levels where price will start to move up again. But there's some important support and resistance levels in the past that you can see the price has broken already. Those in blue boxes, you're going to see them. Will they play a part in moving price back up again? We're going to see what's going to happen. So we look at our chart. So you can see to the left, we have support, became resistance, and then it was broken. So when you look at this chart, as per our analysis we were doing yesterday, this is a new structure low, but we had a high here, okay, a lower high, new structure low, lower high, new structure low. Okay, so this is the new structure low we are waiting. Once it is broken, now we take the market to have reversed. All right, so the market came, it started struggling, it made a new structure it made a new lower high, but it could not give us a new structure low. Yeah, you can see there's a lot of bulls waiting here, push the market up. Actually at this level we have a kangaroo tail. If you can notice this, it's a kangaroo tail. So even here was an opportunity for you even to enter a buy, because it's forming like a double bottom. Yeah, so from here now, after the kangaroo tail, the market went and it broke structure. Rather, we can see now it went above the previous lower high. So the market now it is becoming bullish. So we said the moment that one is broken, it goes past the previous lower high. Now we are looking for opportunity to buy. Okay, so the market has given us a new structure high, right? So now we draw a Fibonacci from the low to high, looking for opportunity to buy. Okay, so we have this support now. It should also be support at this other side there. And we notice that support, it coincides with ratio 50 or even 61. Yeah, so when the price reaches there, you can see that kind of rejection where we have the white arrow. So this also gave us an opportunity to buy, because we said the moment it broke structure, look for opportunity to buy. When it starts retracing, you draw your support line, and then you see there's a confluence between the support and your ratios. So this area becomes your area of interest, because there is support and there are ratios there. There is 50, right? So then now here you enter your buy trade, and the stop loss is below 100. Okay, and again we see the moment now the market start playing out in your favor. All right, when it crosses this new structure high, you move your stop loss to break even, right? Then now you start tracing as the market moves up. Okay, so that is confluence of Fibonacci. That's a ratio confluence with resistance. Yeah. So it is a confluence of support and ratios, and then the market hits there, it continue moving in a bullish direction. But again, we said many times you can always see it coming. Now here we have two confirmations. We have a double bottom here and a kangaroo tail, and then the market broke structure. because you're expecting a new structure low, but instead it went past, it gave us a higher high, or rather a new structure high, because it went past the previous low high. Okay, so we look for opportunity to buy, and then we get that opportunity where we have confluence of ratios and support, and now the market goes up in our favor for a considerable distance. Okay, then we look now at sorry, I think I've skipped something. Then we look now at the trend line confluence trading. Okay, so notice below you could have drawn a trend line and waited for price to come up to it so you can sell as price hits the falling trend line. You could also have pulled up the Fibonacci retracement tool and seen that as soon as price hits the trend line, that level coincides with the 61.8. So most of the confluences, more often than not, they have a Fibonacci involved in them, whether it's an extension or it's a retracement or a correction. Okay, so you have a trend line and price heading up to it, and at the place where price meets trend line coincides with 61.8% fib level. So what happens? This is our trend line, our diagonal resistance. Okay, so when the market came down, which was going up, we notice now, and after we draw our Fibonacci tool, we see now that diagonal resistance, it coincides with Fibonacci 1.8%. So when the price reached there, it was rejected and started, it resumed the downtrend again. So that becomes an opportunity for us to sell. Okay, like here, if you had seen it earlier, there were so many opportunities. There's here where it hits. So when if you are drawing your Fibonacci and you find there's a ratio there, it's a good ratio, then you also make it your area of interest. Then you're able, if it gives you a signal, you are able to enter. Great. So now we're going to look at the key points we note from here. So summary of price action confluence trading. And you're saying price action confluence trading is simply one technical analysis method of looking at the price in the forex market and trading it. The real key to be able to trade price action confluence is to have the ability to spot the merging together. Again, which is very easy if you're able to draw your Fibonacci levels correctly and your support, your resistance, whether horizontal or diagonal, of price when different things like support and resistance levels, trend lines or fibs, all bring price to a clashing point. All right. So the 4 confluence trading price action techniques I have shown you are the ones that tend to appear more regularly. Now that you know what they look like, your job is to keep watching the charts to see if they form and then take trades on those confluence trading setups. All right. So you'd also go now to our platform and see if you can identify some of those confluence levels and how the price behaved when it hit the confluence levels. Okay. So we're gonna share my screen again for you to see. I was also today the morning class. You can see I'd mentioned to you how carotids are very common in the gold chart. They print so often, like you can see here. Yeah, where this arrow is. Look at that candle. Very long tail compared with the body. It's a very good setup for a buy. And it printed at the price there, it was at around 1321, 1338. Those are 17 points, and those are many for gold. Those are quite many when it comes to gold. So kangaroo tails, they work. These patterns work. They are not just stories. So like here, let's assume we've come, just opened your system and you found the price here. Yeah. And then because it's uptrending, you want to buy. Okay. You want to buy, so you draw your, first of all, we look at the left. Remember, we come when the price is at on the red vertical line. So when you look to the left, you see there's a lot of struggle here. Okay. The market, there's a lot of support. It was resistance. Yeah, there's a lot of resistance there down. It will become our next support. Okay. So we draw our Fibonacci. We're gonna do it. We just use our law and we draw it. Okay. And then we notice that support line, it coincides with our 38.2%. So if you're still here, you're saying, I want to wait, this is my area of interest. I'll wait and see how the market is going to behave when it gets here, right? And also this kangaroo tail gives you some kind of confidence or encouragement to know, I think I need to buy this market. There's a lot of rejection from down, it's likely to go up and up. So you buy here, all right? So this becomes your area of interest and you wait for the market to come here. So when it gets here, you just look at how it behaves. So these are 15 minutes. It prints a small kangaroo, bullish kangaroo tail. So 5 minutes may not see much. So we just use this. So it prints a small kangaroo tail, giving a signal to buy. All right. So you buy and the market starts going up with you. Of course, at first there was struggle, then the bull started taking control and they have moved it that far to up to 1338. So that's a confluence. Always look at the left. If there was resistance and the market has crossed it, expect it to act as support. If there was support and the market has crossed it, expect the area to act as resistance if it was support and it has been broken. Just as we said, once one is broken, it plays the role of the other one. Okay, it becomes the other one. You can look if you can see another one. This one is refusing to display fully. We can use another one. But basically, as you just look at the price, this will just be fair. They will occur often. It's just that we are using the longer time frames, which now you might. They also take time to print the longer time frames. They still appear, but they take a bit longer than when you use the time frames. Let me remove this. But basically, that's an example of one of the confluences. But they'll always appear. They'll always appear. Even here, I notice. Here we were. Let me see. It's a rectangle. So here there was struggle here. There was struggle here. Okay. And the market formed a double bottom. So you come and draw your chart and see where do I wait for the market. The market seems to be going up. So again, it's the confluence between 50 and our our support zone. And of course, the market is fair. You can see it went up and up, gaining more strength. So when you notice such kind of areas, they actually give you, they are areas where decisions are made. So if you make the right decision with the masses, then it's likely to play out in your favor. All right. Good. So actually, that's what we can say for now. Unless there's any question, today we can be able to end our class even early. Why not? Once in a while we end early. Any question regarding what we've covered today? Is everything clear? Any question? Are we comfortable with all that? Are we clear on ABCD pattern and you're good? Any question? Yes, please practice. Practice and try to look at those. So at least now I can give you time today to practice. So as we say, tomorrow we'll cover the fundamental analysis. Then we will do the commodity or currency relationship. Then we do a bit of indicators before we end our class on Thursday. Okay, guys, but ask any question. All the questions are highly welcome. So for the next few minutes before the end of our time for class, you can now do your assignments. The same one I gave the morning session. Just look for any ABCD pattern. It can be as back as possible where you feel, just identify it as how you'd have traded it and if it would have given you the profits. Also now look for areas of confidence and you share on the WhatsApp group. Okay, guys, thank you for your time and have a good night.